one thing is that infrastructure will do well. With interest rates also hopefully coming down or remaining stable, you will find that some of these, housing related is an option, but we like to do it indirectly for various reasons. In terms of including corporate governance and the way the industry is, we like, let's say, ancillary sectors which sort of feed in to infrastructure, feed into real estate and stuff, and housing and infrastructure.
Okay, Anil, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.
Well, one market view, and here's another market view. The primary market and the secondary markets both seeing a flurry of activity, while a packed IPO pipeline is getting ready to hit the street. We're also seeing an acceleration in stake sales by promoters. We caught up with Ashish Gupta, CEO of Access AMC, to understand this dual trend of fundraising and stake dilution. Here's his take.
We have seen in the last 2 months acceleration both in promoter stake sales and private equity stake sales. And I think from this week, we are seeing quite a large pickup in IPO pipeline as well. So several large IPOs are going to come in the coming few weeks. So I think this is a trend that we have been seeing over the past 18 months. So even in 2024, there was a fairly large supply of equity coming into the market. And in fact, it was outpacing even the inflow into mutual funds. And in the first quarter, with the market correction, this supply reduced. And now with the market recovering, we are seeing this supply kind of resuming. The good thing is that, we are seeing, particularly with the IPOs now, many new companies, and actually the IPO slated for the rest of the year has several technology companies coming to the market. So different kind of companies are coming to the market. The other good thing is that with this supply coming in, it kind of helps absorb liquidity and does not kind of make the market valuations even richer, right? So I think supply does play an important role. If you talk about our strategy, we have been selective. There are a couple of private equity stake sales that we have participated in, and I think 2 IPOs till date we have participated this year. So we are quite selective. Also, I think overall in the IPO market, some of the frenzy has subsided. So what you were seeing in the second half of last year, when IPOs were getting subscribed multiple times and there were large listing pops, I think now IPOs are getting more rationally priced and subscribed.
All right, now before we head into a short break, a moment that makes every Indian heart swell with pride. Indian astronaut Shubhanshu Shukla has scripted history, becoming the first Indian to reach the International Space Station in 41 years. Since the legendary Rakesh Sharma's journey as a part of the Axiom 4 commercial mission, Shukla took off with his crew from NASA's Kennedy Space Center in Florida at 12:01 p.m., a moment that was witnessed and cheered by thousands on ground and millions back home. And from the salience of space came his first message, a heartfelt salute to his beloved nation, India.
नमस्कार मेरे प्यारे देशवासियों, व्हाट अ राइड। 40 साल बाद हम वापस अंतरिक्ष में पहुंच गए हैं और कमाल की राइड थी। मेरे कंधे पे मेरे साथ मेरा तिरंगा है, जो मुझे बता रहा है कि नहीं हूँ, मैं आप सबके साथ हूँ। आइए हम सब मिलकर भारत की इस ह्यूमन स्पेस प्रोग्राम की जर्नी की शुरुआत करें। जय हिंद, जय भारत।
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share, of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I hold CDSL for the long term?
buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I hold CDSL for the long term?
buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Back with India Market Close right here on NDTV Profit. Now, that time of the show wherein we welcome in Sumit Sarkar to talk about what is being heard on the street. And I'm guessing the street is full of stock moves, Sumit.
There's a lot of
phones have
action.
been buzzing.
Yes, a lot of action stocks that have been in action today. First to name is Deccan Cement. In fact, the entire cement space has been buzzing in trade, but Deccan Cement is something that dealers have indicated that there could be some corporate development. The company could be acquired by one of its larger peer, and the price that has been indicated by dealers is around 1100 to 1200 rupees per share. But do remember that these talks are at initial stage, and it might take time to for the deal to actually fructify going forward. Second stock on the list is PB Fintech. Dealers are indicating that there is a buzz of a potential block deal that could come in anytime soon in this counter. Lloyd Metal is another stock that has been buzzing in trade. dealers indicate that the company's one of its plant might receive environmental clearance soon. So keep an eye out for Lloyd Metal as well. Then there is Vedanta and PNB Housing. Both these stocks, multiple dealing rooms have been suggesting their clients positional buy trades on both these counters. So keep an eye out for Vedanta. In fact, PNB Housing is something that has perked up in trade. It was flat for the first half and now it's up around 2%. And lastly, it's Trend. Dealers indicate that despite the fact that the stock is at higher level, there are sell flows at higher level on FIDs. So keep an eye out as well for Trend in trade as well.
Okay, and Sumit, in some sense, the optimism around Titan is vindication of the fact that maybe retail by and large could be okay. But some of this could also be, and Mahima, you can step into, but some of this could also be because of gold prices going down, cooling off, and therefore...
In fact, they're correcting that just before the buying period comes in for the festive season and for the wedding period.
Which might be positive, right?
Yeah, exactly.
Mahima, any thoughts here?
Yeah, I think the same thing. The gold prices cooling down just before the wedding season could act as definitely a catalyst. Plus, overall also, we were expecting that Q1 for discretionary spending will go up because of tax cuts. Plus the overall 8th pay commission coming in, plus rate cuts as well.
The
so
8th
I
pay
think
commission
that should
is
also
up ahead, right?
Up ahead. But so the second
least the
quarter or
tax
so, but
cuts.
at least the tax cuts and the rate cut, of course. So that will probably lead to more money in the hands of people, and probably they'll go ahead and buy. And I think any dip in gold is probably the indication where people go ahead and just buy right now.
I guess.
Just one more stock that I would want to highlight. Fino Payment is something that we highlighted last week, that the company might get their small banking finance license, and the stock is up to 17% in trade. At least it was up 17%. It's
But
up
still
now
up
9%.
a healthy 9%.
It has cooled off a bit, but it was up 17% at one.
And the chatter still remains the same.
Yeah, something might come in.
Okay, and this something is around them getting
The banking SFB, small finance banking license.
okay, well, watch out for Fino too. Thanks a lot for that, Somit. So keep an eye out for some of these stocks. 4 or 5 listed. You blink it and you miss it. Somit goes really fast, so keep that in mind. But the market is moving pretty fast too. We'll talk about some of the things that Somit spoke about with Aditya in moments from now. But Nagaraj Shetty, to start off the show, because the market is doing well as well. 0.76, 0.78%. Nagaraj, good afternoon. Are you confident enough of giving a fresh long call on the Nifty at the current point of time?
Hi, good afternoon. Of course, Nifty has been in a strong momentum recently from the lower levels. In fact, it was moving in a broader high-low range of around 25,100, 25,200 on the upper side and 24,500 on the lower side. Now, recent the development indicates that there is a higher possibility of a decisive upside breakout of the range. And technically, we believe that whenever the underlying sustains above the prescribed range, it naturally it attracts the upside momentum on the upper side. So the clearly Nifty is moving above the hurdle of around 25,100, 200 levels. I think this time in today's session, it is going to sustain above 25,200 towards that till the end. And in the short term, we could see some swift movement in the Nifty on the upper side. And I'm expecting Nifty to reach up to around 25,600 levels, which is the initial target for the Nifty.
Okay, and what about Bank Nifty, Nagaraj?
Yeah, Bank Nifty is slightly slagging in today's session. The overall trend remains positive. Currently placed at the higher levels, hurdles around 57,000, 57,050. Once it moves above that level, one can expect the next upside momentum towards the 58,000 in the near term.
What would you go ahead and buy today? What are your top picks?
Yeah, I have 2 picks, one from mid cap and one from larger cap segment. In fact, first one is Usha Martin. If you can see the chart of the Usha Martin, has been in a larger consolidation pattern over the last few months. Recently, in the last 2 sessions, the upside momentum has came in from the lower levels. It has broken above the multiple hurdles like downsloping trend line. It has moved above the crucial 200-day EMA, which was holding on in the last 6-7 months. And it has placed above that level, currently trading around 339 levels. I think this is a significant upside breakout of the trend for this stock price. More upside is likely. The immediate upside target would be around 360. One can look to buy at this point of time, currently trading around 339, and one can place a stop loss at 327. Second stock is Jubilant Food. Chartically, if you look at the Jubilant Food was in a larger consolidation phase, and recently it has made a accumulation pattern at the lower levels and broken above the hurdle in today's session. Currently around 711, one can look to buy at this point of time. 750 is going to be the upside target immediately, and 690 is going to be the stop loss.
Jubilant Foodworks and Usha Martin are the two picks that Nagaraj has given for the day. Aditya, hi, good afternoon to you. And since Nagaraj mentioned Jubilant Foodworks, just a quick take on how you're seeing QSRs to fare in FY26, because last 2 quarters have been pretty good for a lot of these counters. And if one were to make an entry in this space, what would the counters be that you would pick?
So I believe FY26 will be much better than FY25 was for all of these companies. As discretionary spending continues to move up, I think that QSR is a space where a lot of benefit could come in. Within this space, Domino's or Jubilant Foodworks would be the top pick. If you're looking for a contra pick, would be Burger King or Restaurant Brands Asia. All of these companies we need to see how the volumes pick up over a period of time to then take positions in all of these companies. So the topic here would be Jubilant Foodworks, followed by a contra pick of Restaurant Brand Asia.
Yeah, but let's look at one of the key stocks for today, and that's MCX. Now that's buzzing in trade after UBS has written a note and increased the target price to 10,000 rupees per share from roughly about 7,000 earlier. So it's almost a 43% upside and a target hike that they've done. Now the key aspect of UBS is giving its highest target, which is backed by strong volume growth for this particular exchange. Let's first look at the analyst coverage, because that's one of the key aspects. That apart from UBS as well, there are 7 buy calls and 3 hold calls on the stock currently, and we've seen that the highest target price now is sets with UBS at 10,000, but we've also seen a target price, a very decent target price with HDFC Research, as well as something like an ICICI Security maintains of roughly about 8,800 rupees per share on something like an MCX. Now, but what was the key trigger today was, of course, the UBS note, and let's look at that in a bit, because the key aspect that they say that the building blocks for the company are now in place to show stupendous volume growth. They've gone on to mention that favorable market dynamics as well as new product launches like the electricity derivatives could propel the growth for the company. They've also mentioned that key volatility in commodity prices, and we were just mentioning about the volatility in gold price as well, leads to increased demand as well, and the robust Q1 average daily volume, which is ADV, has been up almost 50% on a quarter-on-quarter basis, and roughly about 30% on a quarter-on-quarter basis, which is the average daily volume for the option side. So both futures as well as option doing very well for the company as well. The other key aspect that also that UBS had mentioned specifically was around maintaining that aspect with monthly bullion contracts and index contracts also doing very well. And on the gold volumes is also they had very interesting key points. One was, of course, the monthly gold average premium turnover has gone to from 230 odd crores to almost 400 to 600 crores, and that's used to be just 100 to 200 crores earlier in November 2024 when it was launched. The other aspect is the monthly contracts accounted for almost 80 to 95% of the gold ADV and should benefit something like an MCX going forward as well, and that's the positive momentum coming on the stock today as well. Aditya, let me come to you first. A very good afternoon and thanks so much for joining in. In terms of MCX specifically, we have seen a sharp up move in price today, but with the continued increase in gold prices and the average daily volume as well, what's your current call on MCX? Do you see that the earnings growth momentum could be much stronger, because UBS has hiked it by almost 13 to 15% now, and they're seeing a 26% EPS CAGR between FY26 and 28. So what's your view? Yeah, Aditya, that's for you.
Yeah, that was me. Okay. Yeah. So of course, brokerages can come out with very good reports hiking the target prices. But then if you look at the valuation of the stock trades at about 86 times price to earnings. Really very expensive for a commodity exchange per se. MCX, no, mind you, MCX is going to dominate the commodity derivative space in the country. There's no doubt about it. But the valuations across MCX, BSC, or for that matter, when NSE will also get listed, are really very expensive. All these stocks have been continuously moving up. Any drop in trading volumes due to any adverse impact on commodities will mean that the stock price is really correct. So from my perspective, the future for MCX is good. However, the valuations are really very expensive. So for now, I will stay away until the valuations undergo a time correction.
Staying away is Tasha. Nagaraj, on the charts though, anything that gives a little more pivot in terms of more legs to this particular rally?
Yeah, of course, MCX has been on a tremendous up move without showing any reasonable downward correction on the chartically over the last couple of months, we can say. And though it has placed at the higher level, still there is no indication of any tiredness or any reversal pattern building at the higher levels. That means that more upside could be there in the near term. I'm expecting around another around 700 to 800 points is likely. Another 8 to 10% upside rally is likely from here onwards, as overall chart pattern is looking that strong, and I'm expecting more upside in the end.
Yeah, so from a trade perspective, there is some optimism there in Nagaraj's voice. 5.36%. And I remember exchanges are in focus. Even IEX today has a Bernstein report wherein they have cited the target price of 160. That stock is up about 1% as well, so keep that in mind. But moving on to other stories, was domestic traffic in Q1 as badly disrupted as feared? Well, here's the data. Sumit, who just presented what was heard on the street, now joins in with a detailed analysis of the air traffic trends and the answer to that question of mine. Sumit.
Well, if you look at the first quarter of FY26, there have been multiple events because of which the market was fearing that the air traffic growth in the first quarter could be on the weaker side. Firstly, if you look at on April 22nd, 2025, there was the terrorist attack in Pahalgam, which also impacted tourism in that region. This was followed by India retaliated by the Operation Sindoor, and because of this, there was India-Pakistan conflict, which also impacted air traffic. And apart from that, if you see at June 12th, 2025, there was this Air India aircraft crash, and in June 13th started the Israel-Iran conflict, which also led to international airspace closure in some of the regions. So because of these factors, market believed that the first quarter FY26 traffic could be on the lower side. In fact, they were expecting a decline. But however, the data that we have collated and calculated, what we are understanding is that in the first quarter of FY26, air traffic for at least the domestic air traffic could report a growth of nearly 6%. As you can see in this chart, in the first quarter of FY26, the total air traffic is expected to be around 426 lakh. Now, this is calculated using the daily passenger data that we get from the Ministry of Civil Aviation website. Now, this number of 426 lakh is much higher compared to what we had seen in the first quarter of FY25, where the number stood at close to 402 lakh passengers. Now, obviously, this number will be lower than what we had seen in the fourth quarter, but that is because fourth quarter is a much stronger quarter seasonally for any airline company. Now, if you look at the growth chart that is there here, in the first quarter of FY26, we are seeing a growth of 6%. Now, this 6% growth is slower than what we had seen in the last couple of quarters, but is much more than what we had seen in the first quarter of FY25, that is last year, where we had seen a growth of just 4.2%. Now, if you look at the monthly data, in the month of April, we had seen close to 143 lakh passengers, that is around 4.77 lakh passengers on a daily basis, a growth of 8%. In the month of May, it grew by around 4%. In the month of June, we are expecting it to grow by around 5 to 6%. So the overall growth for the first quarter is expected to be around 5 to 6% based on the daily passenger data that we get from the Ministry of Civil Aviation website. Now, if you look at the international air traffic, now this international air traffic are for the domestic players like Indigo, SpiceJet and Air India. Now, there, if you look at on the international front, we are expected to clock the air traffic number at around 1 crore, which is a growth of 6%. Obviously, this number is much lower than what we had seen in FY25, where we grew at around 13% on an average for the full financial year. Yes, the number is lower, but it is at least a growth compared to what the street was expecting of a decline in the first quarter of FY26. Now, if you look at the passenger load factor, which is a measure of capacity utilization for the major airlines, for Indigo, it has come down to 86.6 from 87.3. Not much of a decline, but yet a decline. For Air India, it has increased to 88.3 from 85.3, and for SpiceJet, it has come down to 88.4 from 92.2. So it has declined for SpiceJet and Indigo, but not much of a decline that we have seen in the first quarter compared to last year. So more or less, the first quarter is not expected to be that bad for any airline company. And lastly, if you look at Indigo's consensus view for brokerages, for consensus target price for Indigo stand at around 6,012 rupees, which is suggests a return potential of 7%. Highest target price on the street for Indigo stands at around 6,700, which suggests a return potential of around 19%.
So the first quarter will not be as bad as what one was expecting because of the entire Air India air crash. Indigo seems to be positioned well, is what Somit is saying. In fact, if we can pull up the stock, it's 0.7% higher today, but at 10 o'clock when we broke the story today, the stock was up as much as 2% in trade after we brought the story to you this morning. Aditya, I'll come to you on this one. It's not just Indigo. In fact, a lot of these counters in the tourism space are buzzing well in trade, and this is because it's the season to travel now. It's summer vacations kicking in. A lot of these counters are seeing traction. How do you see the entire space, and what would your preferred picks be?
So Indigo is a fantastic company. The market share that they have gained at about 70%. It's a dream run for the company over the last 4-5 years. Practically with Air India having its problems because of the deadly crash that they had got, and SpiceJet having promoter problems and ex-promoter problems. SpiceJet has also scaled back its operations. So Indigo has had a free run, and because of that, the stock has moved up. Indigo's market cap is at about 2.1 lakh crores. And that values the entire aviation space at about 3 to 4 lakh crores. I feel that is really very expensive. If crude prices were to move up, these stocks will automatically move down because they will suffer the first rent. Or if world goes to the war and Middle East airspace closes down, these companies get impacted the most. So from my perspective, Interglobe is a dream company, fantastically managed, now looking to expand its international operations. That's where the next leg of growth would come. But I would not buy the stock at these valuations. I would need at least 25 to 40% correction in the stock to enter the stock. Aviation is a really very tough business. Even though Indigo has been on top of the business, it takes no time for them to have a bad quarter. So from my perspective, great company. That would be the only pick within the sector, but wait for a correction to enter into the stock.
Okay, wait for the correction to enter into Globe. Nagaraj, what would that correction be like? What are the levels that you're watching out to make an entry in Interglobe?
Yeah, chartingly remains strong, placed at the higher levels. It has bounced back with the gap. The gap is still open. I think at the lower levels, 5200, the higher base where it has made recently and bounced back, that is going to be a good support for the market, for the stock price. And at the higher levels, around 5700 is going to be the resistance as per the range movement.
Got that, Nagaraj. But time for a bull and bear segment. Specialty chemical major Aarti Industries is at the crossroads. Now the bulls are betting on its aggressive capacity expansion and strong growth guidance, but the bears are pointing to persistent pricing pressure as well as high debt levels. My colleague Varsha is now joining in to give us both a bull as well as bear perspective on Aarti Industries. Varsha.
Right, thank you so much for that. So yes, Aarti Industries is buzzing on the back of MK's note, but let's see what is working for the company. Well, it is poised to have significant incremental EBITDA growth by focusing on the ramping up the existing capacities and also increased order inquiries, particularly from US, will boost earnings for the company. While the recent expanded capacities in MMA will contribute to the gradual ramp up and improving operating leverage for 2026. But the persistent pricing pressure and overcapacity concern is one of the disadvantages the company has. the pricing environment remains subdued due to overcapacity, particularly from the Chinese manufacturers. The ongoing pricing pressure, especially in key products like MMA, that is monomethyl aniline, and the agrochemical business, will actually may impact the margins for the company going ahead. While a company do have a favorable macro tailwinds and diversified product basket which will help the company is well positioned to benefit from the current geopolitical situations and the agrochemical restocking, leading to incremental volume growth. While we all are hearing now from the management of every chemical company that the volume growth is back, though the pricing pressure still persists, but at least we are seeing the volume growth to be back on track, and this is one of the reasons why every company rather, or like MK is bullish on Aarti Industries. Then potential US tariff situation could create a new market opportunities across agrochemicals, pharmaceuticals and additives, while the energy business outlook is expected to improve with favorable gasoline naphtha spreads from Q2 of FY26. But elevated net debt level and delayed leveraging is one of the disadvantages the company has. Aarti Industries, if you see, carries a significant net debt which has increased due to ongoing capital expenditure and of course the capex that the company has done in the past. While management aim for net debt to EBITDA under 2.5x by FY28, but some analysts have a projection that the net leverage to remain elevated for longer than period expected. They are on track for their ambitious FY28 growth targets, wherein they are expected to have a sequential recovery when it comes to EBITDA, supported by the cost optimization strategies that the company has, and they have also projected strong financial discipline post FY26 with lower capex, improved balance sheet ratios, and they are targeting net debt to EBITDA under 2.5x with estimate of 20 billion EBITDA by FY28. But company has an historical guidance miss, and this is one of the bearish reason that we have.
Okay, Varsha, but stay on because we want to talk to you about another topic as well. But this is interesting, and because we have the guest who tracks chemicals very closely, I'm tempted to ask Aditya, Aarti in particular, what are your thoughts?
So Aarti, as Varsha also pointed out, Aarti's long track record of over-promising and under-deliver is something that I have reservations about. It is a fantastic company. The promoters are also really very good. But two problems that I have got with the company is A, under-delivery, and B, the debt levels, or not the net debt levels, but the debt levels of the company continue to remain extremely high. Aarti operates in the aromatic benzene space, and within that space, Deepak Nitrite and Vinati Organics are two other companies that are doing fairly well, fairly better than Aarti. For example, Vinati Organics is in the specialty chemical space within the benzene space or the ATBS, and that continues to do really well, where the company's promised about 25 to 30% growth over the next 2 to 3 years. Similarly, the aggressive expansion of Deepak Nitrite and the ability to execute large capex projects is far better than what Aarti is doing. So if I had a pecking order, I would put Deepak Nitrite and Vinati Organics 1 and 2. And then finally, I would put Aarti Industries. Not to say Aarti Industries will also not do well. It will also do well. But that's how the pecking order really is.
Okay. Now that's on this thing. Now Aarti and the amine companies are buzzing as well. At least a couple of them are. Varsha, what could be the reason?
Acetonitrile, the anti-dumping duty of acetonitrile is one of the reasons why Balaji amines and alkyl amines are buzzing in trade today. The acetonitrile will face anti-dumping duty if sourced from China, Taiwan and Russia. Now please know that acetonitrile is a compound which is used in your pharmaceuticals, in your agrochemicals, and the anti-dumping duty is levied for 5 years. Now for the companies that manufacture acetonitrile are your alkyl amines and Balaji amines. For alkyl amines, it is one of the key products which contributes almost 15% to FY25 revenue, while for Balaji amines, if you see, acetonitrile capacity is at 9,000 tons per annum, which company will double the capacity, which will lead to 18,000 tons per annum. And so this is basically one of the reasons acetonitrile being the key product for both the companies is buzzing in trade today.
Thanks a lot for that, Varsha. Nagaraj, before we let you go, We haven't quite spoken to you about the derivative side. I don't know if too many chemicals stay in the derivative side or no, but any derivative strategy that you want to share with us before you leave?
I mean, derivative strategy on the market?
Market, specific stock, what have you?
Yeah, Nifty, certainly the way the market has moved up, I think Nifty and Bank Nifty is looking positive. Though Bank Nifty was little lagging in today's session, I'm expecting this to move up further. Even Nifty as well. One can look to buy even Nifty July future for the reasonable upside target for the at least 8 to 10 days for the near term.
Okay. Nagaraj, we'll let you go on that note. Thanks so much for taking the time out and being with us. Aditya, do stay on. We need to slip into a break on the note that banks are lagging the Nifty and the Sensex, but the indices per se are doing well with IT leading the way. Some more stocks and specific action on the other side of this very quick break. Stay tuned. Don't go anywhere.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio.
Welcome back and thanks for tuning in. The market is in fine fettle. Now, all through the last number of years that you would have heard management conversations, you would have heard them speak, especially in the NBFC space or the financial space, speak about the necessity of having a granular book, about having a well-diversified presence, both physically and online, and having a strong brand association. And when a single company has all the three and comes out with the IPO, you take notice. In this case, the IPO from a pedigreed brand name with a very large size. HDB Financial is what I'm talking about. Mr. G. Ramesh, Managing Director and Chief Executive Officer of the company, joins us right now in our studios. Mr. Ramesh, great having you. Thanks for joining in.
Thank you for inviting me. Thank you.
At the outset, all the best for the IPO.
Thank you.
Just talk to us about the timing of why is it that it has come about this now. Was it in some sense good fortune as well that the Reserve Bank of India did the turn that it did, and it's all aided the whole sentiment around the space?
Right. So we are a 17-year-old company. We've been through a journey. We've been profitable. We have had growth. In fact, we've been profitable from our second year of operations, right? So we have had a good balance of growth and profitability. Today we have 19 million customers. We have presence in 1170 towns with 1771 branches. So that's the scale of the organization. 1,07,000 crore balance sheet. We felt this is the right time, and anyway the IPO is a milestone in our journey, and we felt this is the right time to raise capital. The last time we raised capital was in 2017, when our balance sheet was just about 1/3 its current size. So we managed growth of 3x without actually raising capital. So right time to raise capital plus upper layer. So all comes together, and this is the right time for the IPO.
Most certainly. Is the how do I say, is the landscape looking very solid for the immediacy of growth? I know you look at a very long term, right? And which is what you would, which are the kind of investors who would have come in the anchor book,
right?
And which are the kind of investors you would want on your book as well, per se.
Absolutely.
But I'm still inclined to ask you, because one, there is a series of moves made by the government around raising discretionary consumption,
right?
And there is a series of moves made by the Reserve Bank of India,
right,
to try and help the NBFC sector per se.
Absolutely.
So is the timing very good for the short term as well?
So again, we've been through cycles, right? Through ups and downs, COVID years, managed, to continue to grow and continue to make money for the company and for our stakeholders. So for us, we really don't look at it as immediacy. What we're looking for is a business that's sustainable through cycles, and that's the reality in a growth market like India. We're not really looking at a market that's already well set into which we are trying to buy market share. Our focus has been, how do we create the market? How do we create customers? How do we create organized lending? And one of the things that is something that you'll find interesting is that while we are a subsidiary of HDFC Bank, we do not get any leads from the bank. And the 19 million customers I spoke about have been organically originated by this company since inception. So no inorganic growth, only organic growth. And for us, it's a long runway. We have a large product suite. We believe that when we look at our customers, which is what we call aspirational India, we say, what is it that this customer will need through his or her life cycle? And how do we address that requirement suitably? So for us, the customer is the hero, not the product. The product is really a journey, but how do we engage with the customer through their life cycle so that we can stay engaged with the customer?
Okay. I'm inclined to ask one more question before Mahima and Puneet also chip in. How do you see the next 3 to 5 years of this aspirational India growth working for you, considering the fact that for the longest time we've been bucketed in a particular range of per capita for the average Indian,
right? And
now we're seeing that rise and a larger portion of the upper end of the K really zoom up. How does that augur for a business like yours?
Right. So we say aspirational India, right? And I think one of the things that's really made the aspiration easy to access is technology, right? We have presence in 1170 towns, but the proposition that we have is, irrespective of whether you're coming to us in a metro, a non-metro, or a rural market, our time to process your application is the same. So that's a proposition that we come with because it's on a digital backbone. Now that helps customers. And the other thing that's happened is that even a few years ago, most consumer goods companies would look at urban markets and rural markets separately. For example, if you went to a rural market, you'd find that the same brands have products at a different price point, packaged differently, priced differently. I think that's slowly going away thanks to technology and social media. People are saying, hey, this is what I get in Mumbai, London, or Dubai. This is what I want. And I think that's really driving aspirations. Plus, technology allows us to deliver that aspiration, right, profitably. And that's what we really look at, and that's how we think about it.
Guys?
Right. So I was just going through the brokerage notes for the IPO, and there was one thing that stood out was the hybrid model that the company is, and that's seen as a positive for the company.
That's right.
How do you see this working well for you, and I mean overall an outlook on how does this model work, and plus how is this a positive thing for you?
Okay. So as I said, we only do retail lending. Our top 20 customers is less than 0.34% of AUM. That's the level of granularity. We have no corporate loans, we have no real estate loans. But we work with a very heterogeneous group of customers. I said, think about an Indian sitting in Maharashtra, think of an Indian sitting in Assam, think of somebody sitting in Punjab. They speak different languages, have different sources of income, have different aspirations in terms of what their next requirement in life is. So for us, it's about how do we expand the funnel. And we expand the funnel by telling our customers, you choose the method by which you want to interact with us. We will provide you a best-in-class service. So whether it's a model where a customer comes to our branch, or whether he has a salesperson over at his workplace, or he comes to us digitally, the time taken by us to process his request is the same. Because the backbone is a tech backbone, and that's how we are able to expand the funnel through our phygital model.
Mr. Ramesh, just one question essentially in terms of, you mentioned about the aspiration in India that you're saying.
Right.
That the packaging now cannot be different because the customer wants that aspiration and has that aspiration already.
Correct.
Your presence in tier 3, tier 4 towns has been something that's been talked about as well during the IPO.
That's right.
What is the path forward over the medium term? Do you expect to increase penetration into these tier 3, tier 4s? Or are you also looking at newer places that you can expand in terms of product suite? What could be the strategy going forward?
So 70% of our branches are in city number 101 plus, which is population 101 plus. So that's 70% of our distribution. And the way we think about distribution is that we really lead the work with our manufacturers to help them increase their sales. So in our asset finance business and our consumer finance business, we work with more than 100 manufacturers, right? Between all the consumer products, television, two-wheelers, commercial vehicles, construction equipment, more than 100 manufacturers. What we do is an exercise where we sit with them at least once a year, understand what is their strategy for growth, how do they see growth coming in across India, and where can we partner with them to help them sell more. So in the last 2 years, for example, we opened more than 250 branches. And to us, that's an endless tail in terms of how much more we can add. There's no constraint really in terms of the opportunities. Really the constraint is our ability to invest and make a meaningful impact in the markets that we enter.
Mr. Ramesh, I would reckon that there would be a fair degree of liquidity out there in the offing for the near term. I know you're looking only at the near term, but I'm just trying to understand still. Would you, over the course of the next 2 to 3 years, pursue growth if it comes at a small cost of asset quality, or would the asset quality be the primary focus, even if it means that you have to let go of some growth, even as growth might be healthy per se for everybody?
Right. So if you look at our ALM statements over the years, you'll find that we are fairly conservative. We have a positive cumulative mismatch for 5 years, right? And so we're not the kind of business that borrows short, lends long, takes opportunistic calls based on predicting which way interest rates will move. We're saying we are a lender. We work on 101 principles, which is ability, intention, and end use. We don't do a trade-off. As a business, we make sure that we're balancing growth with profitability, because it's a cultural thing. You let off one for 3 years, getting it back is difficult. So, would I trade off asset quality for growth, or would I trade off, growth for profitability? The answer is that, it's a fine balance that we bring in, and that's what we want to do consistently for the next few years.
So you reckon that over the next 3 to 5 years, even if growth were to pick up, and if we see that pickup in growth numbers, let's assume the hypothesis is that we see a pickup in growth, it would still be accompanied by the asset quality that we've been used to from your organization.
That's right. Having said that, if there's a secular growth in India and the GDP picks up beyond where it is currently, you'll actually find that asset quality improves significantly, because customers have more money, and that's what's really reflecting in the higher GDP numbers. So a good high quality growth really results in customers having more liquidity, more money, and that enables them to expand their businesses, and also improves asset quality.
You penciling that in when you're doing an internal 3-year growth target?
So when we do a 3-year growth target, we would look at which way India is headed, what are the macro and micro tailwinds, and if we believe that the next year is going to be a growth year, we would pencil it into our budget.
Do you? Do you believe the next year is going to be the growth year? Which will...
I'm optimistic about India, which is why I stayed back in India when half my classmates went overseas. I'm extremely optimistic about India, and so far I've been proved right.
Mr. Ramesh, just one on your product profile which you mentioned, because you specifically said consumer loans is one, but the MSME basket is also one. How has the product profile changed over the years, and what do you expect it to be in the medium term? Because we've seen a drastic change within MSMEs as well over the last 10 years. Right. What have you seen for yourself, and what do you expect it to be in a couple of years?
Right. So the MSME, which is it's a large name for what we do. Yeah. MSME itself is a very big field now. I think it's up to 500 crores of investments, if I remember. So our ticket size are pretty small, compared to what even might qualify as MSME. For example, when we do secured lending in MSME, our average ticket size is about 4 million rupees. If it's an unsecured loan, it's about 300,000 rupees. So we're really looking at a smaller segment. And what we really do there in that business, which is about 40% of our book, is what we call the classical neighborhood lending. We identify a territory that we think is good credit, set up a branch there, and we will only lend to customers whom we can meet. Right? So that business, the MSME business, is 40% of our balance sheet. Even today, we'll only put out credit once after a credit officer has met the customer and is convinced that the credit is good to go. Right? So that's the level of granularity that we bring in. That business is doing quite well. So we really don't fund large manufacturing setups, and I said 500 crores is large. So our ticket size are pretty small. So we're really looking at retail trade as one of the big segments. Small manufacturers are a big segment. But again, the market is very heterogeneous. Think about Tirupur, think about Surat, or think about Jorhat. The local economy is very, very different. What we do is make sure that we are part of the economy that's really generating cash flows.
Interesting. Your gross advances mix, I was just seeing that in enterprise lending as compared to where it was in FY23, the share in terms of the overall mix has gone down, but consumer finance has gone up. Is this something that will continue, or are you expecting any change in the overall gross advance mix?
Right. So we started enterprise lending in 2008. When we started the company, we started asset finance in 2011, and we started consumer finance in 2016. So we had a product development process and thought process in terms of what we should be doing next. As I said, we want to make sure that any aspect of aspirational India, we should be having a suitable product so that we can fill in the gap. Given that consumer finance is a newer business, and if you take out 2016, 2 years of COVID, really it's a 5-year-old business, and we have a bunch of products. So that business being a newer business and a larger opportunity has grown. So it was about 13% 5 years ago. It's become 23% now. So that's a mix that will continue to change depending on the opportunity that we see.
Well, we wish you all the best for the issue. We look forward to talking to you on your listing day as well, because I'm sure it's going to be a rocking one.
Thank you, and thank you to you and all the viewers. Thank you so much.
No, not at all. Thank you for coming to the studio.
Thank you.
Aditya, any thoughts here?
Yeah, so we must first objectively analyze the company rather than giving it a tag that it is a HDFC bank subsidiary, so it will do well. Looking at the book is tier 2 lenders. HDFC Bank on record has said that HDB Financial will lend to one tier below the lenders, below the borrowers that they lend to. First point. Second point is the book is concentrated on the vehicle finance side of it. The company will diversify its book over a period of time, but it will the fortunes of the company are related to what happens in the economy per se. If the economy will do well, the company will do well. If the economy does not do well, the company will face a lot of NPAs. Over the past 3 to 5 years since I have been tracking HDB Financial, HDFC Bank has been concerned about their NPA, the rise in NPA for HDB Financial. So that is one of the concerns. The company borrows at about 7.9% in FY25, which is not cheap. It is really very expensive, and but natural that they will go and lend at about 14-15%. Then that's a risky borrower that you are lending to. Now, if we come on to the valuation side of it, at 3.5 to 3.7 times price to book, I don't think that that's a cheap valuation to buy. That is really very expensive. I believe we would see something that happened to Bajaj Housing Finance, where they also came up with a very expensive valuation for their company, and then the stock has seen a time correction. So I believe HDB, maybe due to a listing pop could see about 10 to 15% or 20% listing gain. However, the company is poised to undergo some time correction as the book continues to expand and the profitability comes back. Mind you, the company has grown at about 22% CAGR in terms of loan growth over the last 3 to 5 years, but the profitability has not come in at that pace. It has come at about 8 to 9% because the NPAs have risen. So net over a shorter period of time, I don't think investors will make a lot of money. Of course, over a longer period of time, since HDFC, it's from an HDFC group, I believe that they will do well over a period of 5 to 10 years. So short term, I don't recommend. Longer term, yes, if the valuation is correct, it's a good opportunity to enter.
So with regards to where HDB Financial stands, but we're also joined by Amar Deo Singh, Senior Vice President Research at Angel One, joining us now. Amar, hi, very good afternoon to you. A quick take on KNR Construction. The stock is buzzing post its 4,800 crore order win that it has just announced, and we're seeing significant amount of moves on KNR Construction. Any view with regards to that? The stock is up almost 10% as we speak.
I would say if I look at this particular stock, the stock has been basically was consolidating for quite some time between the 200 and 220 zone, and today has been a very sharp move for the stock, and also volumes have been significantly higher. So yes, it definitely appears that the stock has formed a bottom, and on the upside, the stock is likely to rally towards the 250, 255 mark, which is going to be the first zone of resistance for the stock, where we could witness some profit booking.
Okay, so that's with regards to where KNR Construction stands. Amar, there is one more counter that's doing well in trade today, and that is India Mart Intermesh. And this is on the back of the Nuama note that has double upgraded the counter. But overall, volumes also, if we see, are 7 times its 30-day average today. Any view with respect to where charts are concerned for this counter and more steam left there?
Yeah, I would say that if you look at the structure of India Mart, clearly from an intermediate term perspective, the structure has been very strong, and post the sharp correction which the stock had witnessed towards the 2000 odd levels. What we are seeing is that the stock was consolidating somewhere. It was unable to breach the 2400, 2500 zone, which it has taken out, and it's trading close to 2650. Volumes, as you rightly said, have been significantly higher. So yes, the way the stock has rallied, there seems to be more upside to it, and the stock has the potential to rally towards the 2950, 3000 levels.
And Amar, what are your top picks for today?
Yeah, I would say the first stock to look at is Birlasoft. This is one stock, if I look at Birlasoft, has been consolidating for, I would say, many weeks. It's been unable to breach the 420, 430 level. Currently, it's moved above that level towards 440. Volumes have also been significant of the past few trading sessions. If I look at the structure, that is positive, and on the longer term charts, it's moved from oversold territory. So the stock has a potential to rally towards 465, 470 levels. So one can keep a target of 467 in the short term and a stop loss of 423. And the second stock which I would like to talk about is Titan. This is one stock which was consolidating for quite some time, and today and last few days, we've seen some significant volumes in this particular stock. So Titan is positive. So we can look at buying Titan at the current levels with a stop loss of 3545 and a target of 3795 on the upside.
So Titan there, and Mahima did address the big brokerage note coming in from Macquarie. Really positive on that aspect as well. Amar, as well, any specific BTST or STBT calls for today?
Yeah, one can look at Jubilant Pharma in that regard. So what we are seeing here is that the stock was consolidating. The stock did witness some sort of mild correction towards the 1100 mark. Today has been a strong day for the stock, and volumes have also been significantly on 13th of June, and post that the stock was in for consolidation. If I look at the structure, that's positive. So this is one stock one can look at from a BTST perspective at the current levels, buying at the current levels for an upside target of 1265 and a stop loss of 1133.
Got that, Amar. Aditya, just on KNR Construction, we just highlighted that big order win coming in at this time now. But post Q4, we actually saw multiple brokerages, downgrading the stock as well as, on the results itself. While the company has a very strong order book, it's building on now. Any view that you have on KNR as well as the infrastructure space, because it seems like this new order win has really propelled the stock, and the valuations also look decent, at least for now. Any specific view on KNR as well as anything in the road infrastructure space?
So on the road infrastructure space, NCC continues to be my favorite. NCC has done tremendously well over the last 4 or 5 years. KNR has under-delivered, but now the valuations there are also extremely attractive. So this order win will only boost the company. And over the period of next 3 to 5 years, I believe KNR Construction will also do well. So I have a positive view on the company since the valuations are accretive. The order book, the company has a very big order book. So from my perspective, I'm positive on the company, positive on the space as well, on companies like NCC, Ahluwalia Contracts, or KNR Constructions.
Okay. So that's with regards to where KNR stands. Another counter that was in focus today, and we did do a Know Your Company show on the counter, that was Sky Gold. And what we were concerned about the counter was that promoters were slightly and slowly selling their stake in the company. And we did speak to the management about that. We asked him for a clarification as to whether there will be further stake sale from the promoter side on that or not. And they also clarified, saying that the promoter selling was done for value unlocking purposes. Listen to what he had to say exactly.
So again, on the offload basis question, we are not going to offload anything in the future 2-3 years perspective, because already we have uploaded a good percentage. So we don't want to offload in coming 2-3 years or 4 years anything.
Amar, specifically, just because we were speaking about Sky Gold, anything on the charts that suggests any kind of buying momentum on Sky Gold?
I would say that if you look at the stock has corrected from almost 400 levels. Currently, it's around 325. It does have some support somewhere around the 295, 300 zone. So I would say that's a level where one can look at, provided the stock does find some support, because the sell-off has been quite sharp. So the pullback, if it comes, it's not very likely to last. So it could go in for some consolidation. So 290, 300 is a good support for the stock. If that's not reached, then we could witness some upside towards 340, 350 levels.
And Aditya, I just wanted to get your one view on something like a Tata Motors as well, because we did speak to the management as well today, and essentially the sense that I got was that the demerger would be very value accretive for its commercial vehicle business as well, because the financials are improved, 12% EBITDA margins for CV business, the high ROS. How do you look at Tata Motors as of now, and do you feel that post the demerger, the focus on CV business is much warranted?
Absolutely. The demerger, I think, will make a CV business that is comparable to Ashok Leyland. And we've seen Ashok Leyland's valuation is far more superior than what Tata Motors CV business really is. The CV business has really turned around, and because it is turning around and making about 10 to 12% margins, that stock should be something to watch out for. And anyway, within Tata Motors, they have guided for a slowdown within the US. So I don't think that the stock, US and UK per se, so I don't think that the stock price is going to do anything in the near future. Within the four-wheeler space, I think Mahindra and Mahindra is a better pick. Mahindra and Mahindra is doing extremely well within the Indian market and should continue to do well over a period of next 3 to 5 years. So that is one of my top picks, not Tata Motors.
Amar, anything on VIP Industries? It's seeing profit booking today, but what are the charts indicating, and what's the kind of support and resistance that you're seeing?
If we look at VIP Industries, see what's happening here is that the stock is witnessing some sort of profit booking post the sharp rally from almost 330 levels to 420 odd levels. So we are seeing some sort of profit booking, and higher levels. Now the stock will definitely find a lot of resistance, because if you look at this quarter, the stock is up by almost 15%. In the month itself, it's up by almost 17%. So the stock has witnessed a very sharp rally. So I would say that anyone who's long should not can look at booking some profits, because if it's able to reach the 440 levels, then you can expect the stock to rally towards the 470 odd level, 475 odd level. That's going to be the upside cap where the stock would meet with selling resistance. Fresh entry at the current levels wouldn't be recommended.
Okay, so that's the view with regards to where VIP Industries stands. Anything on Sumitomo Chem as well, because that stock is also seeing a downtick of about 2% in trade today. What are the charts indicating there, Amar?
I would say this is one stock which is clearly in a consolidation zone. Be it a bull market or a bear market, the stock has been consolidating for quite some time. And on the downside, yes, the stock is strongly supported around the 490 odd levels. But again, on the upside, 540, 550 is a zone of resistance. So it's more of a range play for the stock. Those who want to trade in a range, this could be a good stock to look at from that perspective.
Okay, and EID Parry, what's happening there? The stock is up 9%.
Yeah, so if I look at this stock is definitely in a different trajectory altogether. And if I look at the structure of the stock, it's very strong on the long term, on the intermediate term trend. And earlier the stock on, I would say 28th of May had made a high of 1042. So it has breached that level and it's trading at its all-time high. So that clearly shows, and that also on significant volumes. So if it's able to sustain over the 1040, 150, then definitely the stock is headed higher, because the structure of the stock is very strong, but it needs to sustain above the 1040. That's going to be very important. In that case, the stock would rally towards 1150, 1180 levels.
Amar as well as Aditya, thanks so much for joining in, giving us a whole host of views on a list of stocks. We look forward to our next conversation, but thanks so much for joining us today. As we close to the markets, it's been a very, very interesting session to say the least. We've seen multiple news flows on broader markets as well as stocks reacting on news flows. The Sensex up almost 682 points, the Nifty as well up 200 points, and we've been highlighting that on the Nifty 50 that we need a strong resistance to be built at around 24,200. We've seen that push there, and it'll be very interesting if we can maintain that. Let's look at the heat map first of the Nifty. We saw individual moves, and Titan continued to remain there. It's up 3.6%. Aditya mentioned about his positive view on something like M&M up almost 2.2%, while Grasim as well as Infosys also saw some buying in today's trading session as well. Some more moves on negatives. BEL has been continuing to do very well. Some correction there. The top Nifty loses by almost 3%. We've seen some pressure on Kotak Mahindra Bank today as well, but largely it has been a green day today, and it's a very positive day for the market as well. Let's also look at the advanced decline very quickly, because we've seen that momentum at least be very stark today and continued right till the very end. 1,769 stocks that closed in the green was about 476 in the red as well. But Mahima, how are the broader markets doing today?
Right, so broader markets have clearly outperformed the benchmarks today. The mid cap 150 is up 0.5%, but the small cap 250 is the clear outlier today, closing 0.6% higher, almost at its day's high as we speak. So small cap 250. So I think the more action is on the broader end of the spectrum. In fact, let's pull up the BSE 500 and see which all counters have kind of contributed to that gain. There is Samman Capital, which is closing 15% higher. There's Network 18 up 13.7%. There's Balaji Amines up 12.4%. EID Parry, Kena Construction, Equinox seeing gains of about 7%. Something that's seeing profit booking today, a lot of these defense counters, Data Patterns as well as Mazagon, BEL are seeing profit booking. Something like a VIP is down by about 3.4% profit booking there as well. Vima down by about 2.2%. Dixon down by about 2.5%. And Angel One, which is down by about 3%. Before I move on to what to watch out for tomorrow, let's take a quick look on sectors as well. Let's pull up the sectoral heat map and see what sectors stole the show today. Nifty Media, of course, closing 1.75% higher, followed by Nifty IT. like Niels mentioned in the start of the show, saying that it's like a very bumpy ride for Nifty IT. It's like a yo-yo ride for sure for Nifty IT, closing 1.5% higher. Nifty consumption did well today. Auto did well as well. In fact, Nifty Infra as well as the healthcare segment also did well. But overall, private banks under pressure, closed around 0.1% lower. Let's pull up what to watch out for tomorrow. Certain things to keep your eye out today post market hours. The first one, of course, Fed Chair Powell testimony will take place, so something to keep an eye out there. Companies that will trade ex dividend, this is entry dividend, so prime sec there. Infibeam will see a rights issue of around 67 to 267 ratio, so keep an eye out there. And anchor lock in exit, 3 counters to keep your eye out for. Ventive Hospitality, that's 5%, Carraro at 49%, and Sanathan Textiles 2%. And this one is a big one because 49%.
Because it's a very interesting one, because the IPO hasn't done well for investors largely in the cap market space and the auto component space. So definitely that, and endurance also very interesting after the ABS ruling, again up 7% today as well. But with that, it's a wrap on this edition of India Market Close. From myself, Mahima, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit for more.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome, you're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. Viewers, today if we talk about the market, so it was a positive global cues that helped the Lal Street end in the green. Nifty manages to hold above 25,200 levels. Sensex shuts shop over 600 points up. All sectors barring defense end in the green today. Media, IT and consumption lead the gains. Autos also in the fast lane. After multiple delays, it's a truly proud moment for India. Indian astronaut group captain Shubhanshu Shukla Axiom's 4 mission was successfully launched into the space. Now, this historic liftoff from NASA's Kennedy Space Center makes him only the second Indian to journey to orbit 41 years, that is 4 decades after Rakesh Sharma. Shukla aboard the Axiom 4 Dragonflight by SpaceX delivered a powerful first message stating that this isn't just his journey, but the start of India's human space program. Prime Minister Narendra Modi also lauded Indian astronaut Shubhanshu Shukla's historic space Odyssey 2 International Space Station. Now, in a post on X, PM Modi highlighted that Shukla is carrying the hopes and aspirations of 1.4 billion Indians, adding that India welcomes the successful launch of this international space mission. President Murmu also congratulated Indian astronaut group captain Shubhanshu Shukla, calling his journey into the stars a new milestone for the nation. Now, she also stated that the entire country is excited and proud of his achievement. President Murmu also highlighted the international collaboration on the Axiom 4 mission. She also noted that Shukla and his fellow astronauts from the US, Poland and Hungary exemplify the spirit of Vasudhaiv Kutumbakam, proving that the world is truly one family. Oil prices found some respite after plunging in the last 2 sessions amid uncertainty on the Iran-Israel conflict. Prices had rallied to 5-month highs after the US attacked Iran's nuclear facilities over this weekend and have cooled off since then. So Brent hovers close to around $67 per barrel, while the WTI edged higher to hold $65 per barrel levels. Meanwhile, a pullback in US dollar and treasury yields bolstered gold's appeal. Investors are also keeping a keen eye on further weakness in the dollar. Now, the focus shifts to fiscal deficit and US tariff policy as Iran-Israel tensions ease. Aditya Birla Group's Grasim Industries commences commercial production of resin manufacturing block. The manufacturing began at Birla Opus Paints plant in Maharashtra. Resin manufacturing blocks are the crucial components viewers in paint formulations. So they act as binders, providing adhesion, durability, and film formation as well. Nuvama upgrades India Mart to a buy and lifts the target to 3,800 rupees. Now, the new growth cycle begins backed by rising unique business inquiries and net subscriber additions. Fresh initiatives also fuel momentum, prompting Nuvama to boost revenue estimates. Now, with confidence restored, the valuation multiple returns to pre-downgrade levels as well. Domestic air traffic holds steady despite a turbulent quarter marred by conflict and crisis. Quarter 1 of FY26 traffic trends surprise on the upside with no sharp decline, just a resilient curve. Events like the Air India crash and global tensions did not dent the momentum. Domestic players are also expecting 6% growth in international air traffic in the first quarter of FY26. Now, this also signals investor confidence for India's skies. Its turbulence weathered. Now, flight path remains firm. JP Morgan initiates coverage on Indian hotels with an overweight call and a target price of 890 rupees. Now, the firm sees Indian hotels leading the pack on performance, premium offerings, and a strong development pipeline. While the market remains cautious, JP Morgan anticipates earnings beat by Indian hotels in H1 of FY26 to shift the sentiment. Phillip Capital also sticks with a sell call on Dixon Tech, setting a target price of 9,085 rupees. Rising domestic competition bites as key client Motorola shifts up to 35% of volumes to Carbon, now boosted by mobile PLI benefits. Now, the long-term outlook for this outsourcing pivot remains unclear, with pressure building, a possible multiple derating looms. Now, FY26 earnings estimates are also cut to reflect the squeeze. Aurobindo Pharma's wholly owned subsidiary gets marketing authorization from the UK's Medicine and Healthcare Products Regulatory Agency for Dirupeg, I beg your pardon, a pegylated filgrastim biosimilar. So this actually marks the Curatex's third biosimilar approval by MHRA. So Dirupeg is actually used to reduce infection risk in chemotherapy patients, enhancing access to affordable biologic therapies in the UK and Europe. The drug earlier secured approval from European Commission in April 2025, strengthening Aurobindo's global biopharma footprint. Philogen, partnered with Sun Pharma, has withdrawn its marketing authorization application for Nidlegy from the European Medicines Agency. So Nidlegy is used as a skin cancer treatment. The withdrawal comes due to delays in providing additional clinical data, despite over 450 patients having been treated with Nidlegy. Now, the company also plans to resubmit the application after addressing the data requirements, aiming to actually bring this innovative therapy to patients in Europe, Australia, and New Zealand. JB Chemicals has received final approval from the US FDA for its generic amitriptyline hydrochloride tablets. These are used to relieve symptoms of depression. The approval covers multiple dosages ranging from 10 milligram to 150 milligram, allowing the company to expand its footprint in the US pharmaceutical markets. This milestone actually strengthens JB Chemicals' presence in the regulated markets and supports its long-term growth strategy internationally. PTC Industries subsidiary Aeroloy Technologies has signed a landmark memorandum of understanding with Safran Aircraft Engines to boost India's defense aerospace ecosystem. This partnership actually focuses on manufacturing components and materials for military aircraft engines, aligning with the government's Make in India initiative. Aeroloy, specializing in aerospace castings, will collaborate with Safran, a global leader in civil and military engine design and production, to enhance the indigenous capabilities and innovation in the sector. Now, this move actually strengthens India's position in the global aerospace supply chain and supports the country's defense needs. Hindalco Industries, through its wholly owned subsidiary Aditya Holdings, is set to acquire 100% stake in the US-based Aviation companies for $125 million. Aviation specializes in high-grade specialty alumina products used in advanced industries such as ceramics, electronics, and semiconductors. So this acquisition expands Hindalco's global footprint in the specialty alumina. It also adds an annual capacity of 60,000 tons. Timex Group's promoter are set to sell up to 15% of its stake via an offer for sale, that is an OFS, on June 25th, that is today, and 26th. So the base offer includes 7.5% of equity shares with an option to sell an additional 7.5%, totaling to 15%. Now, the floor price is fixed at 175 rupee per share, reflecting a 35% discount to recent market prices. As of March 31st, the promoter held nearly 75% stake in the company. Now, this move will help the company enhance liquidity as well as broaden the shareholder base. Himadri Specialty Chemical has approved the acquisition of a 16.2% stake in US-based International Battery Company for 37 crore rupees. Alongside this investment, Himadri has signed a technology licensing agreement with Sycona Battery, aiming to strengthen its position in advanced battery materials. This strategic move supports Himadri's expansion into the growing electric vehicle and energy storage markets, enhancing its global footprint in sustainable technologies. UBS has maintained a buy rating on Multi-Commodity Exchange of India, or the MCX, raising its target price to 10,000 rupees. The brokerage highlights strong market dynamics and a steady pace of new product launches as key growth drivers. MCX is also expected to see volume growth. Overall, MCX is well positioned for continued momentum in the commodity space. The Employees Provident Fund Organization, that is the EPFO, has raised the auto settlement limit for advance claims from 1 lakh rupees to 5 lakh rupees. Now, this is a 5-fold increase that will help faster dispersal of emergency funds to members. This facility actually covers claims related to illness, education, marriage, and housing. Now, the process ensures claims are settled within 3 days without human intervention. The Metropolitan Stock Exchange of India is planning a new strategy following SEBI's latest rules on expiry days. After getting a fresh nod from the SEBI, the exchange is set to enter the cash market segment and is likely to fix Tuesday as its expiry day, putting it in direct overlap with the NSE. This shift is expected to roll out in the next 2 to 3 months. IndusInd Bank's microfinance arm, Bharat Financial Inclusion, sees a fresh wave of senior exits. Now, COO Vikas Muttu and joint CEO Anujit Varadkar resign amid the scrutiny. The exits follow an internal audit revealing incorrect interest income worth 674 crore rupees and 173 crore rupees in the fee misreporting. So, poor provisioning adds a 2,000 crore hit to the loan book. Gopi Krishna, a 20-year veteran, is promoted to head of the member of services. EY supports the ongoing audit as the bank faces mounting pressure. The National Stock Exchange has filed for a settlement in the long-running co-location and dark fiber cases as part of the proposal. NSE has offered over 1,300 crore rupees. The matter is now awaiting SEBI's approval. And if cleared, the move could finally set the stage for NSE's much-delayed IPO. Starting July 1, the Reserve Bank of India will extend trading hours for the call money market, market repo, and tri-party repo. The call money market will now stay open from 9 a.m. to 7 p.m., 2 hours longer than the current 5 p.m. close. The move is based on recommendations from working group and aims to give market players more flexibility and help improve liquidity management as well. The hottest IPO in town, HDFC Bank's NBFC arm, HDB Financial. IPO opens today. It includes a 2,500 crore fresh issue and a 10,000 crore rupees offer for sale. Priced at 700 to 740 per share, the IPO closes on June 27 with listing on BSE and NSE set for July 2nd. Brokerages unanimously recommend subscribing to the IPO. Some of these include Deven Choksi Research Centrum, SBI Securities. Antique highlights its pan-India presence, granular loan book, and robust underwriting for sustained growth with reasonable valuations as well. And Sher Khan thinks that the issue is attractively priced. Systematics emphasizes growth from a growing customer base, underbanked focus, and strong management. RS Infra Solution list at 205 on NSE and 209 on BSE, below its IPO price of 222. The stock debuts nearly 8% lower, missing grey market expectations. Despite raising 500 crores via fresh issue, the IPO sees only moderate subscription at 2.65 times. Now, retail investors also show strong interest with 5.59 times subscription. Analysts flag aggressive pricing and past losses as concerns. The company also focuses on tech-driven B2B supply for construction materials. Sambhov Steel Tubes opened its 550 crore IPO with a 31% subscription on day one. QIBs lead with 38% uptake, followed by retail at 32% and NIIs at 19%. The IPO includes a 440 crore fresh issue and 100 crore OFS. GMP hovers at 9 to 10 signaling and 11% premium. Funds will be used to repay 390 crore in debt and for general corporate needs. Listing is set for July 2nd on NSE and BSE. The central government cancels the appointment of Pankaj Dwivedi as Executive Director of Union Bank of India. Dwivedi, who took charge in March 2024, is reassigned as General Manager at Punjab and Sindh Bank. The move follows the Delhi High Court PIL alleging sexual harassment and lack of vigilance clearance. Now, this, the 2018 allegations that had included corruption charges, this marks a rare demotion of an ED level official. Snowman Logistics is in focus after it adds 2 new temperature-controlled warehouses in Kolkata and Krishnapatnam, boosting capacity by over 9,500 pallets. With 43 warehouses across 20 cities and a robust refrigerated fleet, the company is sharpening its edge in the seafood, dairy, QSR and pharma logistics. Management's capex of 30 crore rupees for FY26 to 27 reflects strong confidence in India's cold chain growth. Now, though FY25 warehousing revenue was flat, the expanded footprint actually could tilt the momentum there. JP Morgan strikes a cautiously optimistic tone on consumer staples. While FY26 revenue growth is expected to come from modest price hikes and better volumes, Q1 could feel the pinch from seasonality. Competition is heating up and raw material volatility keeps margins on the edge. The firm points to a strategic path ahead. Portfolio gains via selective M&A and distribution revamps are focused on capability building, reducing friction and fortifying supply chains. Tata Technologies has joined hands with Amazon Web Services to launch a platform for engineering students in India to showcase their ideas and build smart mobility solutions. This year's theme focuses on using cutting-edge tech like AI, IoT, cloud computing, and AR/VR to solve real-world mobility challenges. After launching its own online store during the pandemic, FMCG major ITC has now shut down the platform, saying that it has served its purpose. The company is shifting focus to a broader digital strategy, tapping into an e-commerce, quick commerce, and modern trade platforms, while also building a stronger presence in the general trade to boost its overall distribution reach. Tesla's new car sales in Europe plunge 27.9% in May, even as the region's EV market grows 27.2%. The company's revised Model Y fails to lift demand. Tesla's market share drops to 1.2% from 1.8% a year ago. This marks the 5th consecutive monthly decline. Buyers shift to cheaper Chinese EVs and react to Elon Musk's political ties. Overall, car sales in Europe rise 1.9%, led by plug-in hybrids and alternative fuel vehicles. BYD scales back production and delays expansion at several China factories. Now the EV giant cancels night shifts and cuts output by a third at 4 sites. Now rising inventory and missed sales targets prompt this move despite deep price cuts. Plans for new production lines are also suspended. BYD aims to sell 5.5 million cars in 2025, up from 4.27 million last year. The slowdown signals a cooling in its rapid growth streak. Buying a home in Mumbai is still out of reach for most people, despite city hitting best affordability levels in the last 15 years, says a report by Knight Frank. Still spend 48% of their income on the EMIs, far higher than cities like Ahmedabad or Bengaluru. Sluggish income growth and rising property prices continue to weigh on the home buyers even as mortgage costs ease. Big action by the Enforcement Directorate in a 988 crore rupees bank fraud case linked to Shilpi Cables Technologies. Raids were carried out at 10 locations in Delhi, NCR and Ludhiana. The case is based on a CBI FIR which flags fraud with IDBI Bank and others. Company promoter Manish Goyal is accused of illegally sending bank loans abroad using fake transactions. The ED suspects money laundering, misuse of letters of credit, and fake investments through shell companies. Prime Minister Narendra Modi marked the 50th anniversary of the emergency by calling it one of the darkest chapters in India's history. The emergency, he said, saw the constitution being sidelined, democracy put under arrest, and thousands of people jailed. PM Modi also pointed to the 42nd Amendment as a clear example of how the spirit of the Constitution was undermined during that period. Mumbai continues to be drenched, offering a welcome boost to water reserves as the city's 7 key reservoirs now hold 35.02% of their total capacity, according to the BMC. Now, these reservoirs are essential to Mumbai's daily water supply. The IMD has issued a yellow alert for continued rain and cloudy conditions today. With high tide expected around noon, authorities are urging extra caution in flood-prone low-lying areas. Former New York Governor Andrew Cuomo has conceded the Democratic mayoral primary to Zohran Mamdani. The 33-year-old Indian-American and state assembly member is leading the race, though the final outcome will be decided through ranked choice voting since no candidate won a clear majority. If he wins, Mamdani will make history as New York's first Muslim and Indian-American mayor. US President Donald Trump and NATO leaders are meeting today at a summit that could either unite or divide the alliance. The aim of the summit is new defense spending target. Just a week ago, optimism was high for European members and Canada to boost their defense spending. However, Spain has now rejected Trump's proposed 5% GDP defense target, calling it unreasonable. With all 32 members needing to agree, the path forward for NATO remains uncertain. The Federal Reserve is in no rush to cut interest rates. That's the message from Fed Chair Jerome Powell, pushing back against President Trump's demand for immediate rate cuts. Powell made the remarks during a hearing before the House Financial Services Committee. The session remained largely respectful, with lawmakers from both parties appreciating his focus on balancing inflation control and job growth. India's top javelin thrower Neeraj Chopra kept up his winning run this season by winning the men's javelin event at the 64th Ostrava Golden Spike meet in the Czech Republic. Now, this was Chopra's first time competing at this well-known World Athletics Continental Tour gold level event, where he won with the best throw of 85.29 meters. England has won the first test match against India by 5 wickets, taking a 1-0 lead in the 5-match series. Chasing a massive target of 371 runs, England pulled off one of the highest successful run chases in the test history. The hero of the day was Ben Duckett, who scored a magnificent 149 runs, playing a crucial role in their victory. He was also well supported by Zach Crawley, who helped set up a strong start with a huge 188-run opening partnership. Mika Singh called out Diljit Dosanjh, labeling him a fake singer for starring alongside Pakistani actress Hania Amir in Sardarji 3. In an Instagram post, Mika slammed Diljit's decision as irresponsible amid India-Pakistan tensions following the Pahalgam terror attack. Diljit said that the movie was shot before the tensions escalated. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit, as Sanjana Chauhan will be bringing you, Profit 360 just after this short break.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhov Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday.
Markets end higher as Nifty closes above 25,200 on strong global cues, while Sensex gains over 700 points. All sectoral indices barring Nifty Defence end in the green. Nifty Small Cap 250 outperforms all other indices, gaining more than 1.5%. Orbiting the Earth, Jai Hind, Jai Bharat. This was Shubhanshu Shukla's first words from orbit, spoken shortly after the Axiom 4 mission successfully entered the Earth's orbit. IndusInd Bank's microfinance arm Bharat Financial Inclusion sees more exits as officials appointed by the bank step aside. Sources say the Metropolitan Stock Exchange of India charts a new strategy after the SEBI's new expiry day norms by venturing into the cash market segment. Sources say the NSE has filed for a settlement in the pending co-location and dark fiber cases. If approved, the settlement could clear the path for NSE's long-delayed IPO. The IPO of HDB Financial opens with overall subscription at 31% on day one, with NII portion dominating the subscription at 58%. Valued at 12,500 crore rupees, the proposed IPO is set to be one of the largest by a non-banking financial company in India. Buying a home in Mumbai is still out of reach for most people, despite the city hitting best affordability levels in the last 15 years, says a report by Knight Frank. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. Equity indices ended on a strong note, with Nifty around 25,250 and the Sensex up by 740 points. All sectoral indices ended in the green, with auto, consumer, durables, IT, telecom, healthcare, media all up by at least 1 to 2%. Now, the BSE Mid-Cap Index rose 0.6% and Small Cap Index added 1.6%. My colleague Puneet now joining in with more details.
The Nifty and the Sensex had a really good session today, where we've seen a 200-point gain coming in on the Nifty 50 today. We've seen some big gainers like Titan on the Nifty today, while some losers such as BL was one of the biggest one for trading session today. We've seen Titan as well as Mahindra, as mentioned, has been doing very well, and they were the top Nifty gainers for today, while all sectoral indices gained in trade. The Nifty Media as well as the Nifty IT were the biggest gainers, up almost 1.5% for the day. We saw stocks like Network 18 and TV18 Broadcast were the top gainers in the Nifty Media, which dragged the index in the green as well. While we've seen the Nifty Small Cap 250 indices also still a very stellar recovery and end actually at the high point of the day. We've seen something like the Nifty Mid Cap also and the Small Cap 250 gains for the fourth consecutive trading session, and the bullish momentum in the broader markets continues year on as well. The Nifty IT, Auto, FMCG as well as Realty were some of the other indices that gained for the second day in a row, and we've seen the financial services and the Nifty PSU Bank also gain for the second day in a row as well. So it's going to be a very interesting point tomorrow to see if we can continue the rally further on the Nifty 50 and maintain that at 25,200 and become a key support level. But another interesting session today in trading today.
Right, thanks for that, Puneet. Meanwhile, Ashish Gupta, Chief Investment Officer at Axis AMC, notes a pipeline of new companies slated for IPOs through the rest of the year. He highlights that this fresh supply of equity is beneficial as it absorbs market liquidity, which can help prevent valuations from becoming excessively rich. He observes that the prior frenzy in the IPO market has now subsided. Let's listen in.
The good thing is that we are seeing, particularly with the IPOs now, many new companies, and actually the IPO slated for the rest of the year has several technology companies coming to the market. So different kind of companies are coming to the market. The other good thing is that with this supply coming in, it kind of helps absorb liquidity and does not kind of make the market valuations even richer, right? So I think supply does play an important role. If you talk about our strategy, we have been selective. There are a couple of private equity stake sales that we have participated in, and I think 2 IPOs till date we have participated this year. So we are quite selective. Also, I think overall in the IPO market, some of the frenzy has subsided.
And a new era of space exploration and a proud moment for India has officially begun. After multiple delays, SpaceX's Falcon 9 rocket finally launched successfully, carrying the Crew Dragon capsule and 4 astronauts as part of the Axiom Mission 4. Right, all right. And now let's quickly cut across to the 44th AGM of Infosys. Infosys has announced at their 44th AGM the release of the annual report for the fiscal year 24-25. Let's quickly take a look.
Hello, good evening, everyone. I'm Michael Gibbs, Independent Director, joining in from Houston, Texas. I'm the chairman of the Stakeholders Relationship Committee and also the Cyber Risk Subcommittee.
Bobby?
Hello, good evening. I'm Bobby Parikh. I'm Independent Director and Chairperson of the Audit Committee. I'm joining the meeting from Mumbai.
Chitra?
This is Chitra Nayak. Hello. I'm Independent Director and Chairperson of the ESG Committee, joining from California, USA.
Govind?
Hi, this is Govind Iyer. I'm an Independent Director and Chairperson of the CSR Committee, joining in from Mumbai.
Aline?
Hi, good evening, everyone. I'm Hélène Oriol-Potier, Independent Director, joining in from France.
Nitin?
Nitin Paranjpe. I'm an independent director of the company. I'm joining in from Netherlands.
Jayesh?
Good evening, everyone. I'm Jayesh Sangrajka, Chief Financial Officer, joining in from Bangalore.
Manikanta?
Hi, good evening, everyone. This is Manikanta, Company Secretary, joining from Infosys Campus, Bangalore.
Apart from them, we also have key executives and senior management joining us from their respective locations. Statutory auditors and secretarial auditors have also joined this meeting. The company has taken all feasible efforts to enable members to participate through video conference and vote at the AGM. I thank all the members, colleagues on the board, auditors, and the management team for joining this meeting over video conference. I now request Manikanta, Company Secretary, to provide general instructions to the members regarding participation in this meeting.
Hi, good evening, everyone. Members may note that this annual general meeting is being held through video conferencing in accordance with the Companies Act 2013 and circulars issued by the Ministry of Corporate Affairs and SEBI. The notice of the 44th AGM and the annual report for the financial year ended March 31st, 2025 have been sent electronically to members whose email addresses are registered with the company or with the depositories. In addition, physical copies of the annual report have been sent to the members who have requested for the same. Further, the company has sent a letter to shareholders whose email addresses are not registered with the company or depository participants, providing the web link from where the annual report can be accessed on the company's website. The facility for joining this meeting through video conference or other audiovisual means is made available for the members on a first-come, first-served basis. The company has also provided a webcast facility to view the live proceedings of this meeting on the company's website. The register of directors and key managerial personnel, the register of contracts or arrangements, certificates as required under the SEBI Share-Based Employee Benefits and Sweat Equity Regulations 2021, and other documents mentioned in the AGM notice have been made available electronically for inspection during this AGM. Members seeking to inspect any of these documents can send their requests to investors@infosys.com. As the AGM is being held through video conferencing, the facility for appointment of proxies was not applicable, and hence the proxy register for inspection is not available. The company has received requests from a few members to register them as speakers at this meeting. Accordingly, the floor will be open for these members to ask questions or express their views. We will facilitate this session once the chairman opens the floor for questions and answers. Members can also post their views or questions on the Ask a Question tab on the video conference screens before 4:30 p.m. IST.
Right, we'll continue bringing you the latest developments from that AGM, but let's move on to our other big focus this evening. In the latest update from the Nifty Bank saga, sources are now telling NDTV Profit that the microfinance arm, Bharat Financial Inclusions, is seeing more exits as officials appointed by the bank are stepping aside. Vishwanath Nair, who has been tracking the story closely, joining in now with more information. Vishwanath, what exactly are you hearing?
What has happened is Vikas Mattu, who's the Chief Operating Officer of this microfinance unit, as well as the Head of Member Services, has resigned. Alongside him, his joint COO of the company, Anujit Varadkar, has also resigned from his position at Bharat Financial Inclusion. These were two officials who were very recently appointed by IndusInd Bank. As far as Mattu is concerned, he joined only in March of 2023, and Anujit Varadkar joined in May of 2024. Both these officials have now resigned, of course, and this is coming in the context of the enhanced scrutiny that is happening into the microfinance division. Remember that the bank had pointed out that in the microfinance business, they have seen incorrect interest income of about 674 odd crore and incorrect fee income of about 173 crore. Alongside that, due to poor provisioning policies at this microfinance unit, the bank had to make a 2,000 crore provisions against certain NPAs which were not classified as bad loans on the books. So there is an investigation that was initiated by the Internal Audit Department, which was then, of course, supplemented with findings by EY. So therefore, these exits hold more importance. Already a month ago, you saw the executive vice chairman of the company, J. Sridhar, and him also resigning. He was also appointed by IndusInd Bank. So what is exactly Bharat Financial doing to counter these things? Well, they've actually promoted one of their long-term loyalists, Gopi Krishna A., who has been with the company for nearly 20 years. He has been promoted now to Head of Member Services, and he becomes one of the highest ranking officials in the company. So it's clear that the people who are appointed by the bank are on their way out, while people who were always with Bharat Financial before IndusInd Bank acquired the company in 2019, they are now going to take charge, because obviously the situation at the microfinance unit is looking a little tough.
Thanks so much for that, Vishwanath. Let's quickly cut back to Infosys that's having its 44th AGM because we believe that Nandan Nilekani is now addressing. Let's go ahead.
The board has recommended a final dividend of rupees 22 along with the interim dividend of rupees 21 per share, which is already paid. The total dividend for fiscal 2025 is rupees 43 per share. The company expects to continue returning approximately 85% of free cash flow cumulatively over the 5-year period through a combination of semi-annual dividend and or share buybacks and or special dividend subject to applicable laws and required approvals. Under this policy, the company expects to progressively increase its annual dividend per share, excluding special dividend, if any. Salil Parekh, Chief Executive Officer and Managing Director, whose term extends until March 31st, 2027, and who is liable to retire at this annual general meeting, is eligible and has offered himself for reappointment. Based on the performance evaluation and the recommendation of the Nomination and Remuneration Committee, the board recommends the reappointment until March 31st, 2027. During the year, there was no retirement or resignation of directors or key management personnel. As we look around us, there is a perfect storm of multiple colliding trends that is raging. Clearly, the world is shifting from a single global market to fragmented blocks, forcing companies to make strategic choices and navigate between regions. Just a few years ago with COVID, there emerged the need to de-risk supply chains and move beyond just-in-time to just-in-case planning. Tariffs today are signaling to us that businesses must also de-risk their sourcing. With bilateral and regional trade rules emerging as dominant forces, there is a clear need to accelerate supply chain diversification. Add to this the new uncertainty that AI adoption is creating. Legacy system modernization and data architecture overhauls to ensure that all the firm's data is consumable AI are becoming increasingly unavoidable. Companies need both AI foundries for innovation and AI factories for scaling. Regulatory variances across regions, however, present implementation complexities and challenges. Energy transition brings in another layer of uncertainty, with the future now depending on innovations in solar, wind, batteries, hydrogen, and nuclear technologies. Electricity will play a much larger role, requiring massive infrastructure investments in transmission lines, charging stations, and transformers. This transformation too will have to deal with regulatory hurdles. The price of commodities will depend on how fast these changes take place. Every business sector is facing fundamental challenges. Automakers need to transition to electric vehicles, pharma companies need to get better at using AI for drug discovery, logistics firms need to manage supply chain reordering, financial services are exploring tokenization, energy companies need to reassess the long-term demand for their products. Utilities must prepare for a very distributed future. Manufacturers need to successfully integrate robots and 3D printing into the mainstream processes, and service companies are competing with more efficient AI agents. Every type of business in every part of the world is having to first adapt to rapidly changing business and technological disruption before advancing into an uncertain and unfamiliar future. In these times of mounting business volatility, Infosys offers the stability that organizations need to survive and thrive. Our comprehensive portfolio spans multiple regions, industries, and technological domains. We deliver solutions that address both established business needs and emerging market demands for which solutions need to be crafted. Whether clients are pursuing aggressive expansion or navigating operational constraints, we have invested in solutions that are relevant to their strategic priorities. In many ways, it's what sets Infosys apart. Our unwavering commitment to stay a step ahead of change and help our clients navigate the same. At Infosys, we are experts in the convergence of AI, cloud, and data transformation. Through Infosys Topaz, we combine AI's transformative potential with a robust foundation of cloud and data infrastructure, positioning our clients at the forefront of tomorrow's opportunities. Our extensive AI agent library accelerates productivity across critical functions, from code generation and IT operations to build to cash and code to order workflows. We have crafted specialized language models tailored to specific industries, IT operations, and cybersecurity needs. This deep expertise, coupled with strategic industry alliances, enable us to deliver model development as a complete service offering. Cobalt cloud capabilities anchor our AI strategy, connecting seamlessly with top-tier public and private cloud providers, SaaS vendors, and PaaS platforms. Our data mastery, spanning architecture design and comprehensive structured and unstructured data management, empowers clients to confidently deploy enterprise-grade AI solutions. Across every dimension of enterprise technology, we create tangible transformational value while maintaining a laser focus on cost optimization, automation, and operational excellence. This comprehensive capability makes Infosys the partner of choice for global enterprises. As we shifting to becoming more AI-focused, we are mindful about not losing sight of our responsibility to be human first. Everything we do is designed to earn the trust and respect of our stakeholders worldwide. At Infosys, our purpose, the value we bring to everyone around us, is to amplify human potential and create the next opportunity for people, businesses, and communities. We recruited over 15,000 college graduates in the year and ended the year with over 320,000 employees. 39% of our workforce are women employees. During the year, Infosys was recognized as a global top employer in 22 countries for best-in-class HR practices and processes. For the 5th consecutive year, we are also recognized as one of the world's most ethical companies by Ethisphere. We believe true progress is possible only when we serve the broader community, going beyond addressing the priorities of our clients and employees. We have our own blueprint for pioneering responsible business leadership in a rapidly changing world through being sustainable, socially responsible, and exemplary in governance. This is embodied in our environmental, social, and governance 2030 commitments. This year, we have made ambitious updates to the Infosys ESG vision for 2030. This refreshed commitment builds upon the strong vision and foundation that we had already established in 2020, encompassing critical areas include climate action, sustainable resource management, digital empowerment, workplace inclusivity, community development, employee wellness, and exemplary corporate governance. As part of our evolved aspirations, we now aim to achieve climate positive status in 2030, moving beyond net zero to sequester more carbon than we emit, while maintaining carbon neutrality through 2029. Our achievements today speak volumes to the depth of our commitment to ESG. For 6 consecutive years, including FY25, we have been carbon neutral while simultaneously expanding our positive environmental impact. Through 11 lake rejuvenation projects across India, we've increased water holding capacity by 4.3 billion liters. Our human capital development goals are equally transformative, extending digital skills to empower over 18 million people and enabling employment opportunities for more than 500,000 individuals. Our Tech for Good programs have empowered more than 1.25 million lives in e-governance, healthcare, and education, while our digital skilling initiatives have reached 13.3 million people. We have also become the first India-headquartered company to receive binding corporate rules approval from EU data protection authorities, underscoring our governance excellence. Through our community amplification efforts, we will continue to transform lives with technology for good, job creation, and comprehensive CSR initiatives. All of this will be underpinned by a commitment to leading data privacy standards and maintaining a position as an industry leader in information security practices. The world around us is shifting and changing at an unprecedented speed. One of the defining opportunities of our time is harnessing artificial intelligence to drive the next generation of enterprise, to reimagine the way we live and work to our benefit. We have been at the forefront of this transformation and are excited to bring our insights and expertise to our clients' journey. Our recognition as the fastest growing IT services brand over 5 years by Brand Finance, our position among the world's top 100 brands and among the most trusted brands in the US, according to Cantor, reflects why leading global enterprises choose us as their AI transformation partner. I'd like to express a deep gratitude on behalf of the entire board to our dedicated employees, valued clients, visionary co-founders, and the governments of every region where we operate. Thank you for placing your trust in us and for your unwavering support. To our shareholders, your belief in our mission and your continued encouragement inspires us to strive for excellence every single day. Thank you all for being part of a continuing success story. I now request Salil, CEO and Managing Director, to address the shareholders.
Thanks, Nandan. Dear shareholders, welcome to the AGM event. I want to spend the next few minutes to share with you an update on where the company has been over the last financial year. The overall theme I want to talk about is leading in AI and cloud. At the start, we have seen that the overall year has shown us tremendous revenue growth. We've been able to grow the business by 4.2% year on year, with our large deals coming in at 11.6 billion and our clients greater than 100 million at a number of 39. This has shown a continuous growth for the company and a foundation which is building on growth for the future. Then as you look at the next operating performance, we see that our performance in terms of operating margin was very strong, and our performance in terms of cash generation was equally strong. In both those areas, we've been able to deliver at the highest levels that we could drive in terms of cash generation, with a free cash flow of $4.1 billion. On the next slide, we can look at the overall performance of the company in terms of our financials in rupee terms. Our total revenue in rupee terms grew at a level of 6.1%. Our operating profit grew at a level of 8.4%. Our operating cash flow was at a record increase of over 41%. Our net profit increased at 1.8%. Our basic EPS increasing at 1.8%, and our free cash flow increasing at over 44.8%. As we now look at the dividends that we were providing, if you look at the last 5 years, we have constantly been providing an increasing level of dividends each year. If you look at this year, with the recommended dividend by the board, we will be at an overall dividend rate of 43 per share, and each of the years it's been increasing in the past few years. Over the last 5 years, the company has returned to shareholders over 98,000 crores in terms of cash return. If you look at our balance sheet, we have a balance sheet which is extremely strong. Firstly, it's fully debt free. Then it's a liquid balance sheet, and where we are every year adding to from our cash into building out the assets of the company for a long-term sustainable future. Then the biggest move we've had in this past year has been what we've done in artificial intelligence. So in AI, we are today working on 400 generative AI projects for our clients. Using AI technologies, we have generated 10 million lines of code all done through different tools that we use within generative AI. We've also launched very exclusively and at great speed a whole capability around agents, and we have developed 200 agents already. Some of these agents are industry-based agents, and some of these agents are what we call horizontal or functional agents, and these agents are working with our clients to help them in their projects. We're already working on 30 agent-based AI engagements which are being deployed across different clients. And we have today 20,000 employees using GitHub Copilot for coding, one of the largest number of employees of any company around the world. We also recognized as a market leader by market analysts, leading in 9 generative AI studies across different analysts. There are several examples where we have deployed generative AI and AI into our clients. For example, with a large bank, we are using this for some of their financial processes like KYC, where 50% time reduction has been seen. With a large audit firm, agents are doing some of the pre-work and work on the audit. With a large auto company, agents are being used in customer service to improve that. In a large telco, generative AI is actually helping them to improve revenue growth. And in a tech company, generative AI has improved customer satisfaction by 24% on some elements of the customer service. Then, for making AI successful, there are 2 big components that are needed where Infosys is leading. So one of them is cloud, which is really becoming the infrastructure for everything in AI. So we had built several years ago Cobalt, which is all of our cloud capabilities. And here we see very strong demand for AI, which is essentially on the cloud. We are focusing on turnkey network transformation projects, migration, modernization, and also with an extreme focus on minimizing cost in these areas. We are also building our agents on cloud, on any of the cloud which are large public clouds. In their libraries, you can find agents from Infosys, and also which are custom agents with clients. And then getting all of this infrastructure ready for AI, leveraging the cloud. The second component of making AI successful is really the data capability. Data needs to become extremely robust, and many of our large clients are taking the first step of making their data within the enterprise, their architecture ready, so that that AI can be leveraged within the company. So data has become critical. Here we've made strong industry offerings already within the data area in retail, consumer products, insurance, in industrial, auto, aerospace, utilities. We are also working on enterprise data ready for AI, data for business transformation, and to build an overall AI economy using data. And then we are working on this from modernizing the data capability from legacy towards cloud-based and other structured and unstructured data architecture systems. Now, in the environment that we are in today, and what some of the points Nandan shared about it, it's very much focused from our clients on cost efficiency. And here we have a lot of strengths within Infosys. We have very good focus on automation, on efficiency, on lean, and also using AI for productivity improvement, which is one of the core elements of what our clients are looking for. In terms of how all this is put together, our delivery organization is probably the strongest delivery organization within the IT services industry, supporting all of our clients. We have one of the best delivery capability. We work on large and complex programs, and these are deep and also multi-service offerings where it's not just one capability, but many of them coming together. We could have some cloud, some cyber, some infrastructure, all coming together to support our global clients. And the foundation of this is our training capability that was built several years ago, where we have the best training capability in the industry, and all of our employees joining us from college go through that in the first several weeks that they're with the company. We continue with our leadership in digital, something we started several years ago, and that has become the foundation which is allowing us to become cloud first, AI first, and be strong in the data category. In terms of branding, we've done a lot of movement. Top 100 brand in the world, top 3 IT services brand, fastest growing IT services brand, #1 in analyst perception. And we can see in all of the events and all of the interactions with our clients, more and more we see we are becoming one of the more trusted brands in terms of technology and very innovative in terms of what we're doing with AI. This past year, we continued with our focus on small acquisitions in areas which we see good growth in, good client attention in. One of them was in energy consulting, which is based in the US, and one of them was in cybersecurity, which is a company based in Australia. And this builds upon the last few years where we've done several acquisitions which are now integrated, whether the acquisition is on engineering services, on Salesforce in Europe, in US, and also on some of the joint ventures that we've had some good success with over the last few years. Now, while we are doing all of this, we are very active in supporting what is going on across all the communities that we work in. Just in the last financial year, we have completed 200 projects. We've impacted over 1 crore people in India in a positive way with what we have called Springboard, which provides essentially free training on tech training. Over 9 million people have received this free learning all around the world. We have enhanced over 4 billion liter water capacity with restoring 11 lakes in a sustainable way. And over 28 lakh people have benefited from a variety of healthcare initiatives that Infosys supports. One of the biggest reasons why we do all of these things, both from a client side, industry side, technology side, delivery, is that we have a concept called One Infosys, where everything we do comes together for the benefit of the client to bring the best activities that are going on with respect to the client, whether it's in a different geography, in a different industry, or a different service line. We keep our clients foremost, and this One Infosys concept has helped us last year as well. With that, as I conclude, we had a good operational and cash performance, a strong leadership team, a very dedicated delivery organization, deep capabilities in AI, digital, cloud, and data, and many other areas, working as One Infosys, having the strong trust and support of our clients, which has led us to this sort of an outcome for the year. So thank you very much. And with that, I pass it back to Nandan.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Infosys and ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. Sources are telling NDTV Profit that the Metropolitan Stock Exchange of India is now charting a new strategy after the SEBI's new expiry day norms by venturing into the cash market segment. Sources added that the exchange already has all the right regulatory approvals in place and the move is expected to materialize in the next 2 to 3 months. Let me quickly go across to my colleague Charu for all of the details.
The Metropolitan Stock Exchange of India is eyeing cash market segment as per some sources. We know that the market regulator SEBI has recently changed its expiry day norms, restricting the expiry days to a bi-weekly phenomena, keeping only Tuesdays, Thursday as the expiry days. Now Tuesday has already been taken by NSE and Thursday has been taken by BSE, and MSCI has to share its expiry day with NSE, which might, as per some experts that NDTV Profit has spoken to, impact its plans for entering into equity derivatives with a boom. Now we also know that after a fresh funding and fresh revival plans in December last year, one of the most lucrative things about the exchange was the fact that it had hopes for using expiry day Friday as a separate expiry day for itself. However, with the new norms from the market regulator, this seems very unlikely, and that is why, to still hold more value for its investors and for itself as an institution, the exchange is looking into making developments towards the cash market segment. All the necessary approvals are already in place, and the developments could take 2 to 3 more months, and we'll have to see how the developments actually roll out.
Right, Charu, thanks for that, and stay with us because NSE has also filed 2 applications with SEBI to settle the long-standing co-location and dark fiber cases by offering to pay a total of 1,400 crore rupees, marking it the highest amount offered by any entity till date. Charu is at the NSE office. Charu, what are you picking up?
India's leading bourse, the National Stock Exchange, as per some sources, has filed for a settlement in its pending co-location and dark fiber cases with the market regulator Securities and Exchange Board of India. As per some people privy to the matter, we have also been told that this settlement amount could reach above 1300 crore rupees, often termed as an amount, as per some previous reports as well, to be the highest settlement amount ever offered by an entity to the market regulator. Now this would be something that will clear out a big obstacle for the leading boards, making the path more clear for its listing dream that has been in the pipeline since the year 2016. We were also earlier told that other obstacles, for example the clearing corporation norms or any other issue, is also on its way to get resolved. In fact, the SEBI chairperson Tuhin Kanta Pandey in an event over the weekend also mentioned that there are no real pending obstacles and the IPO is on its way. So let's see how the further developments roll out. Also, this is the settlement amount that has been offered. It is not something that has been approved as of now. Once approved, it would clear out the path for the IPO in a bigger way. So let's see how the developments actually take place further.
Meanwhile, electricity derivatives will allow energy users to hedge the price risk, says Harish Ahuja, the head of sustainability, carbon and power markets at NSE. Earlier this month, the SEBI had approved the launch of monthly electricity derivative contracts by NSE, and this move was made to encourage capital investments across the electricity value chain. While speaking to NDTV Profit, Ahuja spoke about the benefits of investing and also highlighted the risk of it.
For all the user who are consuming a fixed amount of electricity in terms of their kilowatt, this particular message is all the industries, all the SMEs, all the customers, high-end customer which have got a load of 70 kilowatt. At this stage, they are using the electricity sold to them by the utilities, discoms. And there is no control on that prices by them. But I think monthly base load future may offer them opportunity to hedge their price risk or take a call on their own prices. Here, any person having load above 70 kilowatt is a natural hedger. They can come and take their trades here and kind of lock their prices for months to come. And that brings some saving also. But being a future options category, it has their own risk and they have to take a lot of learnings before they actually trade here.
So again, one more thing. So as far as our information goes, only MCX and NSE are the two players coming into this. So what would you say will be your advantage over MCX or any other player who might eventually enter?
See, this is a very big product in terms of its reach, in terms of volume we are expecting, and in terms of its transformation impact on the very power sector reform. One exchange, two exchange doesn't matter here. What matters is how you're approaching this commodity, And here NSE has a long-term view. This is first because in 2008, we had our own exchange, Power Exchange of India Limited. So our understanding of spot market is quite deep. And any derivative product get their value from its underlying. And I think being PXL with us, the understanding and the vision we have around this very product is slightly unique. Secondly, we have got National Clearing Corporation, which is a very, very stable, aggregated and well-performing clearing corporation. And here the settlement and, margining system will be worked by them. So I think that also is a USP for us. And third, very important, the way we like to roll out other products. I think we are very well prepared for launching quarterly, annually and CFD products. I think this launch sequence and the calibrated way we launch this will give us a USP.
And let's give you now some updates on the IPOs and fresh listings today. To start with HDB Financial Services IPO, the largest of the year so far, open for subscription. The 12,500 crore HDB IPO is among the largest NBFC issues in recent times and is a subsidiary of HDFC Bank. It's also the fifth biggest in terms of issue size in the last 20 years. So the issue will close for subscription on Friday, that's June 27th. And most of the analysts who have covered the IPO have issued a subscribe recommendation to the issue, citing growth prospects and the HDFC pedigree. Next up, let's take a look at Sambhov Steel Tubes IPO that opened for subscription as well. The total issue size is 540 crores with the price band set between 77 to 82 rupees a piece. The subscription window will be open until June 27th as well, post which it will tentatively list on the exchanges on July the 2nd. Now, based out of Chhattisgarh, this company is a manufacturer of steel pipes and plans to use 390 crore from the net fresh issue to pay back a certain portion of its debt. Now, the IPO was subscribed 22% as of 3:30 p.m. on day one. And shares of Aris Infra Solutions made a muted debut on the stock exchanges. They listed at 7% discount to its issue price at 222 rupees on the NSE, while on the BSE it listed at 209 rupees, marking a cut of over 5%. The 500 crore IPO that was subscribed 2.65 times within its 3 days of public bidding. Aris Infra Solutions is a B2B technology-enabled company focusing on simplifying and digitizing the procurement process for construction materials. And now let's take a look at a very interesting Knight Frank report. The report says that Mumbai's home affordability index has dipped below 50% for the first time in history. This means that Mumbai homes are now more affordable than they were 15 years ago. But what does that mean in terms of accessibility? Anushi joins in with more on the report.
Now, it's an interesting outlook that we are seeing for the Mumbai real estate market. And what is it? This is something that Knight Frank has decoded. Now, according to Knight Frank, Mumbai has emerged as the least affordable city with an affordability level of 48%. But this is not the main point that we are focusing on. The main time is that despite the 48% of a mark that we are seeing in affordability index and it being the most expensive market, it is the first time in history that Mumbai is below the threshold level of 50%. In fact, Mumbai is now believed to be more affordable due to the reduced home loan rates along with better infrastructure that we are looking as compared to the past. Now, this is a surprising set of data that we are focusing on. But how does Knight Frank measure this home affordability index? So this implies that proportion of income of a household required to fund EMI of a housing unit. So a 40% of an affordability index implies that households in that city need to spend 40% of their income to fund the EMI of housing loan for that unit. EMI to income ratio of over 50% is considered unaffordable, which was the mark that we had seen for the Mumbai real estate market for the last couple of years. In fact, if we go back 10 years or so before as well, this number was once at above 90% levels. In other key highlights also, if you are seeing that the overall home purchase affordability had improved in H1 2025 on these interest rate cuts of around 100 basis points, and in house affordability increased across 7 of the 8 cities, with the only exception being NCR, wherein they had recorded a steep increase in where the residential price increases are. Ahmedabad, Pune and Kolkata are still considered the most affordable markets. So it's an interesting set of data that we are looking at, and Mumbai mainly on the focal point.
But it's not just Mumbai. Real estate prices are skyrocketing in Delhi NCR as well, and more specifically in Gurugram. But who is actually buying these luxurious flats, and are they being sold out on day one as developers claim? We discussed this on The Big Question this evening at 6 and 9 p.m. only on NDTV Profit, so don't forget to tune in.
When we are talking affordability index, it is something where the ability of masses to buy a house comes in. You know, because the person who's buying a 700 or 800 crore worth of an apartment or a 200, 300 crore apartment is not really chasing the home loan to actually fund that purchase. It's actually affordability is coming in because largely that segment which depends wholly on housing loan to buy that apartment is now feeling much better off. And also, let's not forget the Pradhan Mantri Awas Yojana, which came in October of 2024. Is also coming in. So there are these two factors which are bringing affordability into all over India market, and more so in Mumbai, because this was one market which used to be the most unaffordable about 15 years back, and gradually is becoming actually more and more affordable with every year passing.
And moving on, there's been massive action by the Enforcement Directorate in a 988 crore rupee bank fraud case linked to Shilpi Cables Technologies. Raids were carried out at 10 locations in Delhi NCR and in Ludhiana. The case is based on a CBI FIR which flagged a fraud with IDBI Bank and others. Company promoter Manish Goyal is accused of illegally sending bank loans abroad using fake transactions. Now, the ED suspects money laundering, misuse of letters of credit and fake investments through shell companies. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, on this program, we talk about everything related to your money, whether it is investments that you make or how to manage your taxes, how to account for your expenses, all of that. And sometimes we talk about products that are currently available, and sometimes we talk about products that have not worked. And today is one of those days. Mukesh Bubna is joining me. He's the founder and chief executive officer of Monexo Fintech, which is a peer-to-peer player. And if you're wondering what that means, let me first ask Mukesh to explain that to you. What is peer-to-peer lending? And then we'll get into the details as to what has occurred over the last few years.
Sure. Peer-to-peer lending, as it says, or the word peer can also mean a person. And we've always seen people lend to each other. Office colleague lends money to his other office colleague. Friends lend to each other. People in business lend to each other. But this word peer-to-peer lending, in true sense today, what it represents is the digital lending where people come together and lend to an individual. So imagine Mr. A wants to borrow 2 lakh rupees and he comes on a digital platform, gives his detail, the platform does the screening, grading of the borrower, and there are hundreds of lenders from A1 to A100 who are funding as little as 1,000, 2,000 rupees to Mr. A, who's the borrower. That's what peer-to-peer lending is currently.
Okay. So, would it be fair to say, Mukesh, that and in the run-up to this, I did speak to you and you explained that peer-to-peer lending in India started quite a while back, close to a decade back. And yes. The initial run or the boom that you saw in peer-to-peer a few years back was because people were seeking opportunities to earn more in the credit space, in the fixed income space, so to speak, because they were earning very attractive rate of interest because of the people that were borrowing. Is that fair?
Yes. See, India recently also has dropped the repo rate by another 50 basis point, and we've seen a large public sector bank dropping the saving account interest rate and the fixed deposit interest rate, much below the inflation rate, if you may say that word. So people will move to more and more investment products, whether equities, fixed deposits, and peer-to-peer lending sits in a, I wouldn't call it fixed return, but yes, a debt product, which can give you a better yield than your inflation.
Okay, but some of that is what led to the problems, because there were players, Mukesh, in the peer-to-peer space that were not necessarily following all of the rules. And so the Reserve Bank of India had to come in and change the regulations. And as a result of which, and this is something that you explained to me, but I'd love for you to explain it to my viewers, because some of them might have tested the waters in peer-to-peer and they're probably wondering why it's not working anymore. So what changed? Why did it change? And why is it dissipated?
Sure. So a lot of questions. So let me give you a little summary starting from international level and very quickly bringing to the Indian shores. Peer-to-peer lending started way back in 2004 in UK by a company called Zopa, which today is a digital bank. Very quickly, it got picked up in US by 2 young entrepreneurs, one from somebody called Lending Club and Prosper. They got into their challenges, but again, they came out, and the regulators are different. In UK, it's central bank, and in US, it's SEC. Coming to our shores, India, in 2014, there was some consultation paper where SEBI said because it's belonging to lending, even though it's crowdfunding, it would not regulate and it would request RBI to regulate it. In 2016, there was a draft regulation, guidelines for consultation paper. And in 2017, RBI came out with a full guideline and who can operate and what is the capital requirement. At that time, RBI specified very clearly that no peer-to-peer lending companies can take deposits. They can only act like a platform. They have to be very transparent. They can charge fees for providing all the services to the borrowers and to the lenders, but they cannot keep a spread like an NBFC or a bank does. So there was a clear prohibition of selling like a fixed deposit. But you would remember COVID came early 2020 and it lasted for 2 years. So it was a very fledgling industry at 2020 when COVID came. And surely the pressures of COVID, a startup world which needs to grow fast, created an environment where few players felt that they can create a product which mimics like a fixed deposit that gives a return which is fixed, like 8-10%, depending on the tenure you give them the money, 3, 6, 9 months. 2, they mimic like a liquid product, like liquid mutual fund. So you can give the money on Monday, take it out on Wednesday, and you can earn interest for 2 days at 8%, which was much better than a liquid fund also. Number 3, they mimic like a mutual fund, where the lenders did not have a say in what loans their money was being assigned. So this continued through the COVID period, and till August 2024, RBI reiterated these are wrong practices. It fined a lot of players also, and it added one more regulation, which was the fund which is kept in the escrow account cannot be reinvested even if the lender wants to do so. So the money has to move from the escrow account to the lender's bank account. So to explain, let's assume a platform collects 20 repayments from borrowers today, and Mr. A is the lender. That money has to be sent out to Mr. A's bank account, say HDFC or ICICI or Axis, within 24 hours of money hitting the escrow account. Now, this puts a very onerous task on the platform. It increases the cost of operation for the platform. It creates uncertainties for the platform whether Mr. A, who's the lender, will send the money back so that they can originate more borrowers. And finally, for the lender, it becomes a very onerous task to track his funds. And he gets the funds in like 5 rupees, 2 rupees, 10 rupees, 25 rupees, which breaks his capital. So it becomes a very unviable product for a lender too, or investor.
Yeah, okay, so you summed it up. And so as a result, Mukesh, can you give me a sense of how large the industry was before these regulations came into force, and where it stands right now, and what the current picture is for the industry?
Sure. So give or take, RBI has issued about 28 to 30 odd licenses till date from 2017 when it came out with the guideline. Operational before COVID must be around 10 to 12. During COVID period itself, 2 to 3 platforms closed down. And after August 2024, where this guideline to remit the money back from the escrow account to the lender account on T+1 has come through, and all the fines have been levied to most of the platforms, most players have paused the business except 1 or 2. The reason they have paused the business is what I explained in the previous question. They don't believe it's worth the time. Number 2 is they have a prior challenge which they need to deal with, where RBI has remandated that, with example I'll explain. In mutual fund, your portfolio and my portfolio, if we both invest 1 lakh rupees on a same day, it depends on the mutual fund investment committee or the fund manager, what does he buy? And we own the same proportion of shares which has been bought in that fund. But RBI said in P2P lending, which was said as original regulation also, that Alex's portfolio will be different, Mukesh's portfolio could be different, and that means their losses will be different and returns will be different. So RBI has mandated that that should have been done by November 2024 and reported back to the regulator. Those platforms are struggling with some of these issues today, and most of us, including us, we have paused the business because it does not make commercial sense to continue.
Okay, so any words of advice to those that are still invested in these platforms and are waiting for their money back? There is no question about them getting their money back, right, Mukesh?
Not necessarily. So all the platforms are collecting money from the borrowers. And today, as per RBI regulation, they are supposed to remit that money on T+1 basis. Now, I am not sure who's compliant, who's not compliant. That's a role which RBI has to perform. But for our platform, we make sure whatever money we get from the borrowers, it is settled to the lender's account on T+1 day from the day the regulation came, which is August 2024. So almost 10 months we've been doing so.
Got it.